Am I audible to all?
Yes, sir.
Yes,
Good
sir.
morning, sir.
Yes, sir.
So welcome all once again for this fire lecture. Yesterday we have covered SFSP policies and fire floater policy, floater declaration, and declaration policy also. So these all we have covered yesterday. All those SFSP perils, their exclusions. So 13, 14, 15, 16 formula also we covered yesterday. Now we are going forward with the reinstatement value policy. Basically, this policy is different than the reinstatement. Actually, reinstatement clause is applied over here, but you must not be confused with this policy. This is like a simple policy only, but here reinstatement value policy. What does it suggest? That the claim settlement will be done on a reinstatement basis. So for that, again, that restatement clause will be applicable. Here restatement should be carried out within 12 months from the date of loss. If it is not, then the company will not be liable for the reinstatement. They can settle the claim on normal basis, normal indemnity basis. Here again, pro rata condition of average will be applicable, which we had discussed yesterday also, how it will be applicable. Like building example I had given yesterday, sum insured at the time of loss divided by value at the time of completion of reinstatement into loss. That is the formula which we applied yesterday also. And if client wants to make a reinstatement, he should show his intention within 6 days, 6 months, and also he needs to, if he wants some extension beyond 12 months, he should ask it before within a 6 months for the same. Then only we can give him extension. Otherwise, the claim will be settled on a normal indemnity basis. Now, one of the very important policy. This is a loss of profit policy, that is called LOP policy, or BI policy, that is business interruption policy, or conjugational loss insurance policy. Here, some sums are expected in examination, or some basic questions can also come. First, this concept should be clear. So we are going accordingly. So here, see what we cover in the LOP policy. Basically, we cover gross profit. Now, what does gross profit meaning? Gross profit is net profit plus standing charges. So when we go for the standing charges, so first of all, you should be aware of the type of expenses. There are two types of expenses when we see in any we can find it any business. It can be a variable expenses and it can be a fixed expenses. Can you tell me the difference between these two? What is variable expenses and what is a fixed expenses? You can find it in any kind of business. Yes.
Variable expenses depends on market value, which fluctuates, and fixed expenses are like rent, taxes, insurance.
Yeah. You have given examples of rent and all this. Okay. But what is the difference? Means, see,
Sir,
it not
the
depends on
difference is
yes.
difference
Yes.
is the variable and fixed में कि variable variable is depend upon the input of the raw material like that, and the fixed is whether our business is running or not, we have to pay that.
Correct. See, there can be a in any business. Suppose our production is going on, so that variable expenses will depend on the production. If low production is there, then expenses will be low. If more production is there, then our expenses will increase accordingly. If our production stops, that variable expenses will stop accordingly. But fixed expenses is different from that, because it will be fixed. Suppose rent, although your business is running or not, you have to pay the your rent. Likewise, suppose insurance cost. Now we are talking about a manufacturing company who will take an insurance. So for them, insurance is a fixed expense because they have to pay insurance expenses. So this is a difference between two. So what will be the variable expenses? Variable expenses will be like wages, then your raw material. Raw material will be your this variable expenses. So now what we are doing, we are covering here net profit plus standing charges. Now standing charges is nothing but your fixed expenses only. So whatever fixed expenses are there, so when business is closed due to interruption, maybe there is a loss due to fire or any allied perils, so that time even the production is stopped, but that fixed expenses, that standing charges is there, so we cover this standing charges also, and we pay for that also. So that is covered under this policy. So we pay basically a gross profit, which includes net profit plus standing charges. Now this why we are paying this and what we are paying. First, for the reduction in turnover, whatever turnover is reduced, for them whatever gross profit that we are paying, and increase in cost of working, that is also paid in this. Now what is the increase in cost of working? Suppose due to interruption in a business, the client needs to make some alternative arrangement. Maybe he wants to make a production, so he has taken anything on the rent, or maybe any other expenses he has made to continue the production. So that is increased cost, that is also covered. So what we are paying not net profit, standing charges, and also increased cost of working. Now there is one provision in the business interruption policy, which is called material damage provision. Now what does it mean? It is simply telling us that loss is payable only if that claim is admissible under basic fire policy. Either it is a SFSP policy or your Lagu, Sukshma, whatever policy it is. So if it is payable in that policy, so then only it will be payable in a BI policy or LOP policy. Now here what is the reason? Because see, because conditions is that because warranties of fire policy will be automatically get incorporated in it in the this LOP policy or CL policy. Independent investigator is not required, because the investigator who is appointed for the business interruption will sorry, for the fire, basic fire property damage cover, will also be make investigation or survey for the LOP policy. And existing such of material damage policy ensures that damaged property shall be restored and insured will get capital. Otherwise what will happen, if basic policy is not there, then after interruption, that indemnity means interruption period will get extended and our loss will increase. That's why if basic fire policy is there, so that what will happen, when we pay that property damage loss, so he'll get some capital, and accordingly the business will reinstate it shortly. So that is the reason. So these three reasons are there why that material damage provision is implemented in this policy. Now some basic concepts. First is the standing charges. I already told you, this is a fixed remuneration, means whatever fixed expenses are there, that is coming under standing charges. Next, gross profit. Gross profit, I already told you, it is means no, I explained to net profit, but gross profit is your whatever your profit after deducting your means variable expenses, means whatever your turnover minus your this variable expenses, it comes. Now while calculating, we consider three things. One is turnover, closing stock, and opening stock. Why we are taking closing stock and opening stock? Because there is a means change in stock also, which also impacts turnover. So we take turnover plus closing stock minus opening stock. It comes your sales turnover. So and in that we are taking a working expenses, so it becomes a gross profit. We'll see some example. Suppose our maybe sometimes they will ask you the calculate the gross profit. Suppose your opening stock is 1 crore, turnover is 5 crore, and closing stock is 2 crores. Then what will be and your maybe working expenses will be, suppose maybe variable expenses is your 2 crores. So how will you calculate the gross profit? What will you do? We will take opening stock plus we will take your turnover. What is our turnover is 5 crore plus our closing stock is 2 crore. So it is a 7 crore. 7 crore. In that 7 crore, what we will subtract? We'll subtract our opening stock. which was 1 crore, so it becomes 6 crore. And suppose maybe your 1 crore is your working expenses or variable expenses, that 1 crore will also be subtracted. So your this 7 minus 2 will come, 5 crore will be your gross profit. So accordingly, maybe you can calculate the formula. You just write down. I have not given in this PPT. So it will be your turnover plus closing stock minus your opening stock minus your working expenses. It will be your gross profit. This is another kind of calculation. And if you know the net profit and standing charges, so your net profit minus standing charges is equals to gross profit. That is another type you can calculate. So whatever is given in the sum, accordingly you can calculate your gross profit. Now there can be increased cost of working for additional expenditure. I already told you, like see, suppose there is a fire in a premises, so he can make alternate arrangement by taking any other premises on rent. So that will also increase his cost, and that will be payable subject to it is reducing means whatever. Suppose he has taken one premises on the rent, and he has produced something some amount of goods, some quantity of goods over there. Suppose he has produced something and he earned some profit. Suppose he earned profit over there, say 5 lakhs rupees, and rent is if rent is 7 lakhs, will not pay 7 lakhs, will pay only 5 lakhs. If the rent is 3 lakhs, so what will we pay? We will pay 3 lakhs. So subject to limit of whatever that income is produced by that alternate arrangement. So that also will consider. So we'll pay for increased cost of working, but not fully up to that limit. Next is the turnover, money paid or payable for goods sold and services rendered. That is our turnover. So basically we can say this is a nothing but a sales. Now, period of insurance, ideally, period of insurance should be same as our fire policy. So it will be easy while claim settlement. Now, period of indemnity can differ. We can take period of indemnity. Here, question comes: what is the minimum period of indemnity under a loss of profit policy or maximum? So here, always remember 3 months to 3 years. That is a period. So minimum period can be 3 months. Maximum period can be 3 years. That can be taken for the interruption. That is the period in which, suppose there is a loss due to a fire and production is stopped. So up to what period that loss will be covered? That is a indemnity period. So that is other than our policy period. So that can be taken from 3 months to 3 years. Now sum assured will be based on the gross profit. Whatever gross profit is there and what is the indemnity period is there, accordingly gross profit is fixed by the insured. Now there are two things. One is a standard turnover and another is a annual turnover. Sometimes maybe they can ask you, yes, any question? Sometimes they can ask you what is a standard turnover, or they can give you example like this is a policy period, there is a this is a interruption period, this is a maybe like they will give you different examples. I will explain this standard turnover plus annual turnover with the example. Suppose maybe a policy period is first April 2021 to 31st March 2022. This is a policy period. Next, indemnity period has taken 3 months. Okay. Now there is a loss which is occurred on 1st January 20. Suppose policy period is 21-22. So 1st January 22 there was a loss. Indemnity period is 3 months. So now, if indemnity period is 3 months, so indemnity period is from 1st January to 31st March. Okay, in this case, indemnity period will be 1st January to 31st March 2022. Now, for that, what will be the standard turnover? For standard turnover, we will take a indemnity period, the turnover immediately before date of incidence, which corresponds with the indemnity period, means similar period of the previous year. So now our indemnity period is 1st Jan to 31st March 22. So our the turnover will be taken for 1st January 21 to 31st March 21. Means similar period, that 1st Jan to 31st March we have taken a similar period, but instead of year 2022 we have taken a 2021. Okay, so that is a standard turnover. Now what is the annual turnover? For annual, calculating annual turnover will take a period from the day before the date of loss for the 1 year. Annual, you must be aware that annual months means it should be a 1 year. So date of loss is 1st January. So we'll consider till 31st of December. So 1st January 2021 to 31st December 2021 will be our annual turnover period. So the production between that period will be our annual turnover. So I think you must be spotted the difference between standard turnover or annual turnover. Is any doubt between these two period?
Sir, bit not clear, sir. Can you repeat?
Okay. I will. I'm having example later. I will explain there also. Before that, just I'm telling you rate of gross profit. Gross profit is nothing but gross profit divided by turnover into 100. So that also we'll see. Okay, we will see here indemnity period. Suppose say 1st June 2020 to 30th October 2020. Now annual turnover will be what will be? I told you it is for 1 year, but which one you are the day preceding the date of means indemnity period, you can say, when indemnity period is starting from 1st June. So our even on the same date of the previous year, our annual turnover date will start. So 1st June 2020 is our indemnity period starting. So 1st June 2019 our this annual turnover period will start, and it will last till 30th May 2020. So whatever is a production between these dates, between this 1 year, that will be our annual turnover. Is this clear now? Annual turnover. Any doubt in annual turnover?
No, sir.
No, sir, clear.
Okay. Now standard turnover. Now for standard turnover, what we are taking? We are taking the similar period of the preceding year. So our indemnity period is 1st June 2020 to 30th October 2020. We are taking same dates of the last year. So it will be 1st June 2019 to 30th October 2019. Means we are taking that. Suppose this is a 4 months indemnity period here in this policy. So the 4 months of the similar period, means June to 1st June to 30th October we have taken in 2019. Is this clear now? Standard turnover.
Yes, sir.
Yeah, because this actually when it comes for a scale 1 to 5 examination, that time for the sums are little bit complicated. That time they will produce it in some these dates, and they will ask you to calculate the gross profit. But for your examination, they can simply ask you, they can simply give you different dates, and they can ask you what is the annual turnover period or what was the standard turnover period. So if your this concept is clear, you can easily answer these simple questions. Okay. Then under insurance, what now we are looking under insurance. Now see, gross profit is maybe anticipated in advance. What will be the gross profit? Maybe it is anticipated because on the basis of last financial year's turnover. They can say that means something 5 crore is my anticipated gross profit. So they can tell anything, but whatever they are giving gross profit, for that rate we will apply on annual turnover, and will find whether that sum assured is sufficient or not. I will explain it in example later, because in examples I have covered that also. But just I'm telling you, just for under insurance, what we are looking, whatever the rate is of gross profit, we will apply that on annual turnover. And if that when applying on annual turnover, if gross profit is coming more than whatever is insured, then there will be under insurance. Okay. Now again, excess. Now in our basic property policy, we are giving excess in terms of amount, maybe 10,000, 5% of claim amount is subject to minimum 10,000 or minimum 1 lakh likewise. But here it is an interruption of business for particular period. So here excess is in terms of period, which is a days. So when there is a other than petrochemical risk, That time means for the simple risk, that will be 7 days, and for petrochemical risk it will be 14 days of gross profit. What does it means? Suppose 3 months interruption is there, so we will deduct 7 days gross profit from the whatever payable amount. So that will be our excess. We will not say that we will deduct 10,000, 1 lakh, whatever will be our payable amount is there. From that we will deduct that 7 days excess. Now when in examination this will not come, because you do not need to deduct this one or this one, because this will get complicated. But simple sum can come. They can ask you the period excess, what is excess for petrochemical risk, other than petrochemical risk, even for engineering MLOP policy, actually this is, I think engineering is not for your syllabus, but for your information, for that also 14 days is excess is there, MLOP policies, because in IR policy your MLOP is there. So for that also it will be helpful. Here 7 days for 7 and 14 days in fire LOP, but 14 days is for MLOP policy. Now sum assured will be estimated gross profit. I already told you gross profit exam, how to calculate that we have discussed. All these we have already discussed. Now I'm taking some simple examples, because I think there will be simple examples for you, and I will take one complicated example also, although it is not expected, but most of your concepts will be cleared by that example. So if simple questions comes on that, so you can calculate that also. So now one simple example: turnover is given 1 crore, variable charges 60 lakhs, standing charges 30 lakhs. Can you tell me what is the gross profit and what is the net profit here, so that we can check whether your concepts of net profit and gross profit is clear or not? Can you tell me? Can anybody calculate it?
Gross profit is 40 and net profit is 10.
Okay, gross profit is 40 crore. See, simply when we are calculating gross profit, what we do, we are deducting variable charges from the turnover. So turnover 1 crore minus 60 lakhs is equals to 40 crores. That is our gross profit. But for net profit, what we are doing, we will deduct our standing charges also, and it will be 10 crore. Now in this example, how much is loss payable? Can anybody tell? 10 crore, 60 crore, 40 crore, 1 crore. What is the loss payable? Actually, there will be some other factor also, but just we are taking a simple example. How much it will be
40,
payable?
40 crore.
40, because we are paying gross profit. Always remember. Okay. Now another example: if gross profit is 5,000, standing charges is 3,000, then net profit will be. It is a simple example. So I'm just you just apply the formula: 5,000 minus 3,000 will be to 2,000. Just a simpler one. Now this you solve. Turnover before fire was 50 lakhs. Standing charges is 10 lakh, and net profit is 5 lakhs. Turnover after fire is 25 lakhs. Can you tell me what is the loss payable here? What is the amount of loss payable in this means example? How much will be payable? How will you calculate this?
15 lakhs, sir.
15 lakhs. Okay. Any other answer? Actually, I will request everyone to try, because what happens if you try here, you can check whatever mistakes you are making. So you can come to know that. If you try directly at the time of examination, then you can commit that mistakes. This can be avoided here itself. That's why I'm asking you these questions. So you just try. Whether it is wrong, then also it is fine. Okay, one answer came 15 lakhs. Any other answer?
20 lakhs.
20 lakhs. Okay. Okay, two answers came. Yeah,
7,50,000.
Okay. So three answers came. Okay. So here it becomes your three options here. Now let's see how it will be calculated. See, first what we do, we will calculate the gross profit. Okay. Now gross profit is net profit plus standing charges. This is clear. So how much is our gross profit here?
15 lakhs.
It will be 15 lakhs because 5 lakhs plus 10 lakhs, it will be 15 lakhs. Now we have to calculate the rate of gross profit. So for calculating the rate of gross profit divided by turnover into 100. This is a simple formula. So just you apply the formula, you will get a gross profit rate, which is a 30%. Okay. So we calculated it, and we come to know that there is a 30% profit in the business. Now we will apply this on our turnover after fire. So what will actually here annual turnover is not given. Okay. So here what we'll do. Okay, turnover after fire is 25 lakhs. We'll apply 30%. So profit actually what we'll do. We will first check this how much is the reduction in the turnover. First, see, when we have seen turnover before fire was 50 lakhs and turnover after fire is 25 lakhs. So 50 minus 25, that's why we are taking 25. Don't presume that we are taking 25 lakhs because it is after fire. No, we are first we are deducting a turnover after fire, which is 25 lakhs from the 50 lakhs, and the balance is coming 25 lakhs only. So that much is the reduction in the turnover. Suppose it is a 50 and 20, so we could have taken 30 lakhs. Okay, understood why I am taking 25 lakhs, because the same 25 lakhs is given as a turnover after fire, so you may get confused. That's why I'm telling you, suppose it is a if it is a 50 and 20, so we'll take 30 lakhs, not that 20 lakhs. Okay, so understand, we are taking difference in a turnover. So what is the reduced turnover here? 25 lakhs in this particular example. We'll apply 30%, which is a gross profit rate, and it becomes 7.5 lakhs, 7 lakh 50,000. Okay. Now, so that will be our loss payable. Actually, we have not considered here under insurance and everything, because such sum will not come. I will explain it later. This is a simple sum where we have just checked what is the gross profit. We in second step, what we have done, we have applied we have first said what is the gross profit. We have taken a gross profit rate and applied that rate on the reduction. Whatever reduced turnover is there, on that we have applied, and we found out 7,50,000. So third answer which was given, that was correct. Okay. Do you have any doubt in this example? If anybody has any doubt, you can ask here. Clear your doubt there itself. No. Okay. Going forward. Now, next example is turnover during last financial year was 12 lakhs. Gross profit means whatever sum assured is there, that is a 3 lakhs. Period of indemnity is 12 months. Annual turnover is 16 lakhs. Standard turnover is 10 lakhs, and turnover during interruption period is 4 lakhs. Now, this will be medium difficulty level. If they want to make it tougher, they will not give you the annual turnover, standard turnover terms. They will give you the period. So from that period, if you are aware what is annual turnover period, standard turnover period, from that you can find out what is annual turnover and what is the standard turnover. Now, can you calculate what is the loss payable in this sum? Can you tell me? Anybody is trying?
Yes, sir.
Okay.
So 1,50,000.
1,50,000.
Okay. Two answers came as 1,50,000. Anyone else is trying? Fine. We'll move forward. See, first, now here we will go step by step. First, we'll find a rate of gross profit. So here, see, our this one gross profit means sum assured is taken 3 lakhs, which will apply on last financial year. Don't take annual or standard turnover to find out this one. Okay, because in last example actually that was a similar one, so that's why we have taken here. But now last financial year's turnover is given, so we'll apply it on that, which is a 12 lakhs. So 3 lakh divided by 12 lakh, it coming 25%. Okay, then step 2, to ascertain shortage in turnover, which we have seen in previous example also. What is shortage of turnover here? Can anybody tell what is the shortage of turnover here? Which turnover will take? Which two turnover will take for calculating shortage?
Standard and this one.
6 lakhs.
Interruption period or indemnity period, we can say. Okay, standard turnover and interruption period. So 10 lakh minus 4 lakh, it is coming 6 lakhs. So 6 lakhs is a shortage. Now we'll find out rate of gross profit applied on the reduction turnover. So here we'll apply that 25% is our gross profit rate. Reduction is 6 lakhs. So actual 1.5 means 1,50,000 will be there. Now this is actual amount payable, but what we are doing, we are checking here adequacy of sum issuance. Why we are checking it? We are checking here whether there is under insurance or not. For checking that, we'll apply that rate of gross profit on annual turnover. So annual, if you'll apply it, see now what is annual turnover?
16
lakhs. Okay, and what is our gross profit rate?
25%.
So how much profit is coming for annual means
4 lakhs.
turnover period?
4 lakh.
4 lakh. So they should have taken sum assured as
Under
4 lakh.
4 lakh.
So but they have taken only 3 lakhs. So there is under insurance of 25%. So simply we apply the simple formula, the sum assured which taken divided by sum assured which should be. So that is a 4 lakh. So 3 lakh divided by 4 lakh into claims means amount payable or loss incurred, we can say. So that is 1.5 lakhs. So 3 lakh divided by 4 lakh into 1.5 lakhs, it's coming 1,12,500. Understood this one? How that under insurance worked here? Is there any doubt for maybe for the calculation?
That gross profit is a 3 lakh. That's why it was under insurance.
Yes. Gross profit means sum assured is taken 3 lakhs, but actual gross profit is 4 lakh. In annual, when we have seen the period just means annual 1 year period before the indemnity start, that time we found that actually there was a 4 lakh actual that sum assured should be or gross profit should be 4 lakh, but client has taken 3 lakhs as a sum assured, so he has taken less sum assured.
Sir, please see question. That's the original question. Okay. Please move the slide, sir. Yes, sir. That's...
Yeah. Any doubt? See, now I will explain here what is the use of all these figures here. See, first turnover during the last financial year. Okay, why it is helpful? Where will you use in your example? Till so that your concept. Yes, to find the rate. Okay, for finding rate only. Otherwise, there is a no use of this 12 lakh. Last financial year's profit is useful to find a rate only. Gross profit to find a rate also, and to check adequacy of sum assured. Okay, because we applied this 3 lakh on 12 lakhs and find out the rate. So first we use this gross profit there. Second, for the adequacy of sum assured also we have used this one. Okay, next period of indemnity 12 months, that is there. Okay, yeah, this will be helpful if maybe loss is beyond that, then we'll take 12 months only. That's why that period of indemnity is helpful over there. Annual turnover. Why annual turnover is helpful to us? Why it is helpful?
To find if it is underinsured or not.
Correct. If to find under insurance, we'll use annual turnover, and to check the difference, we'll use standard turnover plus turnover during the interruption period. Understood why all these figures are given and what is the use of each and every figure? Understood this one? So if you understand this,
Yes, sir.
what is the use of which figure, then you can easily solve any example, because you will know where to use which figure. Okay, understood this one? Or shall
Yes,
I explain this example again stepwise? If you do have, if anybody is having doubt, I will explain it again. Please tell me. Or shall I move forward?
Please explain once again.
Explain it once, yes.
Okay, we'll go step by step. Now see, first step is of our rate of GP. Now how we calculate rate of gross profit? What is the formula for calculating rate of gross profit?
Gross profit divided by turnover.
Turnover into 100.
Yes, gross profit divided by turnover. But which turnover?
Last financial.
Financial year.
Last financial
last
year. Okay,
preceding.
so 3 lakh divided by 12 lakh into 100,
100.
it comes 25%.
Lakhs.
What is the second step?
20%.
After calculating turnover, what will we calculate?
Standard shortage of turnover.
Shortage of turnover or reduction in turnover. So what is the formula for that?
Standard turnover minus interruption.
Okay, so 10 lakhs minus 4 lakh. Our answer is coming how much?
6 lakhs.
6 lakhs.
6 lakhs. Okay, that is our shortage of turnover. Okay, or reduction in turnover. Now we want to find out gross profit. To find out gross profit, what is the formula?
Gross.
We'll apply the gross profit rate, na?
Percent into
That is 25%.
Yes. 25% into
6 lakhs.
6
That
lakhs.
is 1.5.
Reduction in turnover. It is
1.50.
coming 1.5 lakhs, means 1,50,000. Correct? This much is understood. Okay.
Yes, sir.
But as we are having this annual turnover, so we'll check the under insurance also. If an annual turnover is not given, then we cannot check it. So then we'll directly answer 1.5. But if annual turnover is there, that means they are asking you to check whether there is under insurance or not. So now what will you do? We will check, we'll apply the rate of gross profit on annual turnover to find out means actual sum assured, what should be the sum assured. So annual turnover is how much?
25%.
16 lakh
16 lakh.
multiplied by our
25%.
rate of gross profit 25%. So it's coming 16 lakhs into 25%. It is coming
4 lakhs.
4 lakhs.
4 lakhs.
Understood this one?
Yes,
Yes,
sir.
sir.
But is sum assured sufficient? Is sum assured sufficient?
No, it's under insurance.
Under
that is
insurance.
It is under insurance. So we'll apply the under insurance formula. What will be the under insurance formula?
E by 4 into
Sum assured taken divided by total sum assured multiplied by loss value. In our case, it is a gross profit, is a loss. So 3 lakhs divided by 4 lakhs multiplied by what is our loss
1.
of gross profit?
50,000.
1.5 lakhs. Okay, so it is coming 1,12,500. I hope it is clear now.
Yes, sir.
Is it clear now?
Yes,
I have a doubt.
Okay.
Yes, sir.
Please ask.
So if the company is incorporated in the current year itself, then naturally there won't be any last year figures. So what will we do in this case?
Okay, if company is incorporated in current year, what they took, they take estimated, means they will not take this one. They take estimated this one, estimated figures for calculating this one. And in these cases, and your annual turnover and standard turnover, they are taking the same from the date of inception.
Okay, thanks.
Okay, so they are starting it from the date of inception, because we do not have more than that period. Okay, date of starting, not date of inception. Precise word will be date of startup of business. When business is started, from that date it will be taken. Okay, although it is a less than maybe for the annual turnover, still that will be taken. Okay. Now here one more thing is that increased cost of working is also payable, provided the expenditure is less than the reduction in turnover avoided. Now I am making this some more complicated, although it will not be there for you, because uh, for 13.2 I don't think that they will ask you, means in same question they will have so many tricks in this, so just because that can be a simple question, but as we are discussing this one, suppose in this example itself, uh, uh, that client has taken one premises by premises on loan, for which he has paid 10,000 as a rent, and by which he where he could produce turnover of rupees 1 lakh. So how much this is nothing but a increased cost of working. So how much increased cost of working will be payable in this case? Can anybody tell? What I said, what two things I have added? The rent is 10,000 and he has increased, he has produced 1 lakh of stock worth rupees 1 lakh over there. So how much will we pay to him? Increased cost of working. What will we find out in this case? Yes. What will we find out in this case? We'll find out the actual profit made by making such an arrangement. Now, how much profit is made by making this arrangement? What is the turnover earned there, or what is the production made there?
1 lakh.
1 lakh. What is our rate of profit?
25%.
25%.
25%. So, how much is earned over there?
25,000.
25,000.
25,000. So by paying 10,000, our 25,000 is saved. So we'll pay entire 10,000, or means all his rent to him. So that in suppose this is added in this example, so we'll add 10,000 in this, and the amount payable will be 1,22,500. Understood this one?
Yes.
Sir, 1 lakh 20.
Understood.
1 lakh. Sir, 1 lakh 22,000. That is for month, because we are giving the rent for 1 month. So,
Correct. I'm telling maybe for 1 month. Just I'm taking a 10,000.
Okay.
Maybe for a period. Just for example, I have taken. You are correct.
Okay.
Absolutely correct. If it is a 10,000 per month, and for suppose it is a 4 months, so we'll check. Maybe for suppose, and now only as you asked. Suppose in this case, it could be 10,000 per month, and it is rent paid for the 6 months. Now, how much we will pay? Increased cost of working.
Increase cost of working.
Tell me.
We will pay 60,000.
Will we pay 60,000?
Yes.
If we have produced 1 lakh in 6 months there?
Zero.
If 6 weeks, then it will be 0.
It will be 0. Okay. Any other answer? Maybe simple question they will ask. Not in this question. They will just give you like this, and they will ask rent paid is this much, and production is this much, profit rate is this much. These 3 things they will give. So what is the cost of working which will be payable here? Increased cost of working. See here, 6 months rent is
60,000.
60,000, and actual profit on there is
25,000.
25,000.
So we'll pay 25,000 at least, because 25,000 we have earned that profit na, because of that expenses. So we'll pay that 25,000. So whichever is less, either profit or increased cost of working, whatever is less, that much we will pay. Okay. Here again, actually that is under insurance, but if I will explain that under insurance in the increased cost of working, again it will become complicated, and they will not ask you such things. That's why I'm not taking this one. But this much is clear.
Yes, sir.
Okay.
Yes,
Okay.
sir.
Okay. So going forward. Now next policy is industrial all risk. From its name, it suggests all risk policy, which means in actually all risk policy, everything is covered except the exclusions. So actually perils are not listed, although we will discuss the perils whatever are there, but in all these policies, whenever you will study all risk policy, in that always remember that everything is covered except the exception. That's why it is called the all risk policy. Now here, no requirement of minimum sum assured. Earlier there was a requirement of sum assured of 100 crores, but now this is waived off. Now for any sum assured it can be taken. So there can be question in the example, what is a minimum sum assured for industrial all risk? 1 crore, 2 crore, 100 crore, 50 crore, or no sum assured. So no minimum sum assured is the answer. Remember that. Okay. Now under insurance is up to 15% is waived in this policy. So suppose it is insured for 100 crores, and while suppose there is one claim occurred in IR policy. Sum assured is 100 crore, and there's the claim amount is say 50 crore, or instead of 50 crore we may say maybe a claim amount is 60 crore. See, sum assured is 100 crore, claim amount is 60 crore, but while checking at the time of loss, total value of the insured property was 150 crore. How much it is payable?
60 crore.
How much will it be payable
60
in
crore.
this case? 60 crore is payable.
60 crore. Yes.
No,
60
no,
crore
no,
is
sir.
payable. Then
Uh,
how much is payable?
69.
40.
Sir, that is one.
40 is the correct answer.
45.
Yes, correct.
40 crore.
40 is the correct answer. 40 is the correct answer. I will give another example and then I will explain it together. Suppose this one. Total value is 110 crore. Then it is how much? Then how much loss is payable in the same example? Sum assured is 100 crore.
60
Then
crores.
loss value is 60 crore, and actual total value is 110 crore. Then how much is payable?
60 crore.
60 crore.
60 crore. That is the correct answer. Now, what is the difference between these two? If if there is a under insurance up to 15%, that is waived. Okay, but if under insurance is of even 16%, then we will apply that under insurance for total 16%. That's why when there was a 150 this one, so 33% was under insurance, so we applied that 33% on the claim amount. Understood the difference between those two examples?
Yes, sir.
Yeah.
Yes, sir.
So remember, under insurance is only 15%, but up to 15% it is waived. But if it is 16%, we will not apply under insurance for 1%. We will apply under insurance for 16%. Okay. Now, stock shall be covered at market value. No declaration facility is available here because in this IR policy. So it will be covered at a market value, and building and plant and machinery will be covered at a reinstatement value basis, which we have seen in the reinstatement. So reinstatement value policy clause will be applicable for building and plant and machinery, not for the stock. Stock will be settled at a market value. Now there is there are two things in industrial all risk policy. There is a compulsory coverage also and optional cover. Now everything except machinery LOP policy is compulsory here. So what is that? One is the fire insurance, it's compulsory cover. Burglary insurance, this cover is given free. They can ask you which of the following cover is given free of cost in industrial all risk. So remember, burglary insurance cover is given free of cost. Then machinery breakdown, boiler and pressure plant, electrical equipment insurance, and FLOP, fire loss of profit. So we'll apply all these rate. We will as we are giving burglary insurance as free of cost. Other than that, we will apply all the rates and give this one. If client opts for machinery loss of profit, we'll apply that rate also and give. So machinery, two things are important here. One, burglary insurance is a free of cost, and machinery loss of profit is an optional cover. So either client wants to opt it or not, that is his wish. Okay. Now in this policy, again there are two sections. One is a material damage section, and second is a business interruption section. So in material damage, whatever property damage is there, maybe fire, machinery, all these will be covered here. And section 2, which two covers will be there in section 2? Which two covers will be there? FLOP and MLOP. Business interruption, but two types of business interruption are there. One is FLOP and second one is MLOP. If MLOP opted, of course, then these two covers will come here. Now we'll see some exclusion for section 1, which is a property damage. First, faulty or defective design, interruption of water, gas, electricity. Well, I think most of this one we have. You must have seen in the fire also, and because see these exceptions are like whatever exceptions are there in fire insurance, machinery insurance, these are only listed out here. So you can go through this. These are exceptions. If anything is there, then loss is not payable. Directly, I'm moving towards the section 2, which is a loss of profit. We already discussed business fire LOP, so that is covered under this section. Now here, loss of gross profit arising out of interruption of insurance operation. So that will be there, and here we are paying gross profit plus increase in cost of working. We just discussed business interruption policy. So the similar coverage is given here in section 2 of IR policy. Now there are some exclusion to this section. One is insurance lack of sufficient capital. If due to that sufficient capital is loss extended, we will not pay for that. We'll reduce the claim for the same, or because of that, if not that could not be reinstated, then we'll not pay. Or even there can be a just reduction in a turnover because of lack of sufficient capital. Definitely it is not payable, because again, which clause comes there? Which proviso comes under business interruption when loss is payable? Which proviso I explain here while explaining a loss of profit?
Material damage.
Correct. That is a proviso. So here material damage is not done. This loss is because of insurance lack of sufficient capital. Any restrictions imposed by any public authority. So if any public authority has imposed any restriction, so not to produce anything or not to export anything, so that is because of that restriction. So we'll not pay for that. Loss for causes like cancellation of a lease license or order, etc. Damage to boilers, economizers, machinery, electronic installation, and data processing equipments. So these are the exclusion under this policy. Okay. Now here some clauses are applicable in this policy. First is the designation of property clause. Can anybody explain me what is the designation of property clause and why it is important in IR policy?
The book value, whatever in the book of the insured, that will be applicable to us. Whether it is a written
Book value.
That is a designation of that item. Like if it is written this is a building, we will take it as a building.
Okay, simply you are correct. In simple terms, we can say the classification of any item. Okay, so suppose any item is termed as a building in their books, as you said, then it will be termed as a building for the loss settlement. So this will be taken, because sometimes we find that there is under insurance. So while for calculating the same, we need to check whether complete sum assured is taken or not. So designation of property clause says that whatever classification is made of any item in their books of accounts, that will be taken as it is. Okay, will not say that, will not question that. No, this is coming under furniture or fixture. You are taking it in a machinery. If it is taken as a furniture and fixture under their books, so we will take as it is. Okay. Next is agreed bank clause. You must be aware that whatever settlement made to the bank will be settled. Assume that it is settled to the client. Okay. So agreed bank clause, you must be aware in each insurance it's coming for the hypothecation and all these things. Architect, surveyor, consulting engineer fees clause. We already discussed this one. Omission to insurance also we have discussed when we were discussing SFSP policy. So all these clauses are attached to here also. Now excess, I already told you, FLOP 7 days for petrochemical risk LOP 14 days and MLOP again 14 days. So you remember, maybe they can ask you straight question on this. Now we will discuss some new products. First is a new India Bharat Suraksha policy. Second is new India Bharat Laghu Udyam policy, and new India Bharat Sukshma Udyam Suraksha policy. When these new products came into force, can anybody tell me the date?
1st
April 2021.
1st April
21.
2021. Correct. So remember this, that maybe sometime they can ask you this also. Okay, now we are starting with the New India Bharat Laghu Udyam Suraksha policy. Now it is for the total value of sum insured assets, location does not exceed 50 crore. And if sum assured is 4 crore, can I take Bharat Laghu Udyam policy?
No, so
Yes,
sure.
No.
No.
We have to
It
take
will be more than 5 crore and up to 50 crores. Okay. Now tell me, suppose I have taken a Bharat Laghu Udyam policy for sum assured say 45 crores this year. Okay. Now in between what happened? After 6 months, my stock increased by 10 crore. Now it became 55 crores. Okay. So if it is a 55 crore in between, will my policy be converted into SFSP policy or Sukshma policy, or it will be continued as a Laghu Udyam policy? What will
As
be
it
the
is
impact
Laghu-
of that?
Laghu Udyam policy, sir. As it is Laghu Udyam policy, endorsement will be there.
Yes.
Endorsement will be there and it will be in Laghu.
Continued as Laghu Udayam policy itself.
At the time of
So
renewal, it will be changed.
correct. So remember, although there is an increase in the sum assured in between of the policy period, the policy will not change. Even if it is 100 crore also, maybe sum assured is doubled. I have taken a sum assured of 50 crore and 50 crore is increased in between. Then also my Laghu Udyam policy will be still continue. Even if my sum assured is going down for the 4 crore, then also it will not be converted to the Sukshma policy. It will be continue as a Laghu Udyam policy. Same is for the Sukshma also. If from Sukshma to Laghu, sum assured increase from 4 to say 10 crore, then also it will continue as a Sukshma till the renewal. On renewal, it will be converted to the whatever sum assured is accordingly, it will be converted.
The
Is this
system will
clear?
not accept, no sir. System will not accept, no sir. Just for my information.
When system will not accept?
When in the period of renewal, suddenly the value will increases to more than 50 crore.
Yeah, so that's why we will convert it, no? That's why we will convert it into the next one, next policy. Suppose if it is more than 50 crore, system will not accept it as a Laghu policy. So we have to take it as a SFSP policy. So definitely at a renewal we have to convert it anyhow.
Okay, sir.
Okay. Till the renewal, it will be continue as it is. Till renewal only means till the expiry of the current policy period. Okay.
We pass the endorsement in between the system.
Yes. Any doubt? Please be loud.
If we pass the endorsement in between to increase the sum insured, will system accept?
Correct. It will accept definitely, because as per provision, in middle of the policy, in when this policy need not to be changed, so system will definitely accept it. It should be okay. So going forward, basis of indemnity and valuation here, building, plant and machinery, furniture and fixtures, other contents on RIV basis, but raw materials will be at means stock will not be calculated and reinstatement value basis. So stocks can be of 3 types: raw material, stock in process, and finished stock. Okay, so when there is a raw material, we will take a landed cost. What is the landed cost?
Raw material cost plus transportation cost.
Correct. So the cost till our premises. Okay, that is a landed cost. Then stock in process will take a input cost. Now what will come under input cost?
Raw materials plus
Manufacturing
transportation
cost.
plus labor for processing.
Correct.
etc.
So that landed cost plus till that process, because it is in process, so it is not a finished stock. So whatever process has come, maybe there can be process 1, process 2, process 3, process 4. So after process 2, whatever material is there, whatever stock in process is there, so the cost of that 2 process, in that your labor will come, your other input cost will also come under that. We'll add all this together, and that will be your input cost basis. Then next one is a finished stock. On finished stocks will be settled at a manufacturing cost basis, means input cost of all the process plus your this landed cost, means raw material plus transport, means carriage inward, and plus this all the input cost of the all the processes. Okay, so that will be there. But here we even contract price can be also taken for the goods sold but not yet delivered. It is for that only, because see, there was a contract between the insured and their client, that this much means goods will be sold, delivered to you on so and so date. But if because of loss, if they are not able to do that, they are even losing their profit. So that is a in contract price, definitely this profit is included, and that will also be payable on that contract price basis, if there is a contract for that. Then there's a bullion or unset precious stones, curious. This all you know that this will be done on a aggregate value basis. Okay.
Sir, I have one doubt.
Yes.
Sir, this basis of indemnity is same, is applicable similar in case of SFSP policies also same for raw
In
material,
SFSP,
stock is in process and all. Is it similar like this what you explained now?
yeah, it is similarly in SFSP also, but here contract price, actually we don't give the profit this one. So here if it is aggregate this one, then only contract price will not be given. The manufacturing cost only we are giving on only that. So no profit margin will be given there. For that, if there is anything, then business interruption policy is there. Okay. So that will not be paid in SFSP policy. Otherwise, we are paying. See, second thing is that in SFSP, RIV is not compulsory. Reinstatement value is not compulsory. Here, reinstatement is compulsory for this one. So all the three, yes, building, plant and machinery, F&F, all these are settled on RIV basis only. But there, RIV is not compulsory.
Okay.
So that is also a difference.
Then I didn't get your point on contract price. What did I?
Contract price is for goods sold but not yet delivered. This is just suppose there is a contract, means if there is an order received and insured wants to deliver that item, it is already sold, which is already sold in our record, that this goods is sold. So see, in contract price there will be a profit also, no? So see, manufacturing cost may be a 5 rupees per unit, but we may sell it for 6 rupees.
Okay.
So that 6 into number of items will be our contract price. So that much we will pay for that loss. So it means already it is manufactured and it is kept just for the dispatch, but before dispatch only there was a loss. So then we'll pay that contract price.
So in this Bharat Lagu Udyam, so on contract price, we give full including
for only for the goods sold but not yet delivered, not for all stock. Suppose there is a no
selling price also. We include that profit also in this.
Yeah, that is a contract price, na. So then because already that goods was sold, but not only delivered.
Okay. But this is not.
If it is not sold, then we'll settle out manufacturing cost. So understand the difference. Understand the difference. See, there is a manufacture. Maybe there is a production of maybe 1,000 units. Okay. So out of that 1,000 units, maybe say 100 goods were sold. Okay, they were sold but were not dispatched or not delivered. So for that 100, we will take a contract price. For 900, we will take a manufacturing cost on. Will not include the profit for that.
Okay, sir. So this contract price in SFSP, in terms of SFSP, they will not include the selling that profit margin.
We will settle. If they want, then they have to take it additional, means this cover extension cover. Contract price, the provision is there, but not this one. They have to take an extension for the contract price.
Okay. Thank you.
Okay. Now we have already taken that this water. Building, plant and machinery and furniture fixtures will be on RIV basis, but this is only when the reinstatement is done within a 12 months. So I am not explaining again, just remember that all the RIV clause terms will applicable here for the settlement on RIV basis, otherwise will not settle on RIV basis. Okay, then that option is given to us. Okay, then automatic reinstatement of sum assured. again the same as we have seen in SFSP policy. It is the same. Under insurance, yeah, here under insurance is up to 15%, like we have seen in IAR, industrial all risk. Here also 15% under insurance is waived off. Okay, if more than 15% under insurance is involved, full under insurance will be taken for claim determination, and under insurance is not applicable for specific contents as they are insured on aggregate value basis. So if there is any maybe as any valuable paintings, so for that under insurance this under insurance will not be applicable, because this is already this is on aggregate value basis where we are settling on that price on. But for other things we will take 15%. Okay, so in Bharat Laghu Udyog we will take 15%. Under insurance will be waived off. Now, what are the perils covered? Just see, whatever similar peril I will not explain. What is the difference that I will say? See, in fire, one thing is added, that is including due to its own fermentation, naturating or spontaneous combustion. It was not there in SFSP. Remember, always remember when you are solving, means when you are attending your exam, please read your question carefully, which policy it is, and accordingly you have to answer. Okay, and suppose yesterday also I explained you, if policy is not mentioned, then you have to assume it from your sum insured, whatever sum insured is there, from that up to 5 up to 50 and more than 50, accordingly you have to select the product. Okay, so understand the things. Maybe sometimes they will say the house. If house is there, then definitely it is a Gೃಹ Raksha policy. Then no need to check the sum insured also. So you just keep in mind, you have to read each and every question carefully, because there are many changes. Even there is a changes in Sukshma and Laghu, that also we'll see. So that also remember. That's why we have to read the question carefully, which policy it is, and accordingly you have to answer it. Okay. So in fire, what is the change here? Tell me. What is the change?
Combustion.
Only spontaneous combustion.
Its own fermentation,
own fermentation, naturalizing or spontaneous combustion is included in this policy, even in Sukshma also. Okay. Then explosion, implosion, as it is, lightning as it is. Okay. Next, EQ is covered inbuilt here. Okay. Now, if there can be a question. Tsunami is, options are maybe they will ask in Laghu Udyog policy, tsunami cover is option A inbuilt, option B add-on cover, option C extension, option D none of the above. What can be the answer? Inbuilt. Can we find in any of the perils tsunami is mentioned is in their perils?
No, sir, but earthquake and STFI both are covered.
Correct. Because EQ and STFI both are inbuilt cover. That means tsunami is automatically a inbuilt cover. Okay. So they can ask it in different way. So to understand whether you are aware or not that EQ and STFI both are covered, then tsunami is covered. Okay. So earthquake, volcanic eruption, and other convulsion of nature is inbuilt now. In SFSP, this is a add-on cover. So remember the difference here. Okay. Then next is the STFI, storm, cyclone, typhoon, tempest, hurricane, means all the STFI perils. Now this cannot be deleted in our basic SFSP policy. This cover is there, but this can be deleted. But STFI cannot be deleted in this policy. Subsidence, landslide, oxide as it is, bushfire, forest fire. Okay. What is the difference here?
Forest fire
and jungle fire included, which is not there in SFSP policy. Okay, so remember that this difference. So you should study with comparison to the SFSP policy, so it will be easy to understand. Next is impact damage. Is there any difference in impact damage than the SFSP policy?
Here everything is covered.
Owner's vehicle is also inbuilt.
Okay. Anything else?
Animal is not mentioned.
Aircraft is included in impact
Correct.
damage.
Aircraft damage was a separate cover in SFSP policy. That was also covered there, but that was a separate cover. but here that is included in impact damage itself. So that is also one of the difference. So these two difference is there for the impact damage. So they can ask you, they can give two statements for the impact damage. Which of the following two statement is correct? One or two, one and two, one, two, only one, only two. Like they will give, they will give these two things that a vehicle and all this. This is one, and second one is aircraft damage is included. So
Sir,
both is
insured's own animal damage is covered, sir.
animal is not there. Animal is again not there, no.
Okay.
Okay, only vehicle.
Okay.
Fine.
Okay, sir.
Sir, but
Missile
in
testing
that,
operation, similar. RSM, rise strike malicious damage is also there. Act of terrorism. Act of terrorism was add-on in the SFSP policy, but it is inbuilt cover here. So remember, terrorism cannot be deleted again here. Terrorism is a inbuilt cover. So it is a compulsory cover or inbuilt cover. Busting or overflowing of water tanks is a similar. Leakage from automatic sprinkler installations. That is also similar. This one is a new cover. Theft within 7 days from the occurrence of the and approximately caused by any of above insured event. So that can be they can ask you the question. There was a fire, and after 3 days of a fire, one tape recorder or maybe music system was stolen or stolen. So whether how much is the payable? So they can give you nil also option to understand whether it is payable or not, or they will give you the amount of that tape record and all these things. So you remember that that is covered under the policy, because within 7 days of occurrence of any of the insured event, not only fire, maybe any other aircraft damage, impact damage, terrorism, missile testing operation, whatever it is. So any of the insured event, if it happened within 7 days, theft is also covered. Now, addition, alteration, and extension up to 15% of sum insured. It is inbuilt cover here. In our this other SFSP policy, we have to take it as an add-on cover. Temporary removal of stock up to 10%. It is an inbuilt cover here. Cover for specific contents. Here, see, money and documents up to 50,000. It is inbuilt cover. And computer program information data up to 5 lakhs is also there. Again, there is optional cover actually of a PA. PA can be PF. In this it is a inbuilt cover. When grow Raksha, there will be an optional cover of PA that we'll discuss later. Now for here, personal effect of employees, directors, and visitors, 15,000 per person. Maximum up to 20%. These all are inbuilt cover here without charging extra premium. Then startup expenses up to 5 lakhs. Remember this limit, they can ask you how much startup expenses is payable. We'll see it there also in Sukshma. That time we'll again compare between Lagu and Sukshma. Startup expenses is 5 lakhs here. Professional fees, reasonable fees of architect. Here, see, professional fees is how much in the SFSP policy? How much is basic cover? 3%. Here it is a 5%.
5%.
Cost of removal of debris in basic policy?
1%.
1%. It is a 2% of claim amount. So remember this difference. Cost compared by municipal regulation, additional cost of reconstruction of property incurred solely for complaint. Maybe any regulation is changed because of which anything else is required. Suppose suppose that board for the board, maybe local language is compulsory. Earlier it was not there. So now that is compelled by the municipal regulation. So that cost will also be increased, but that will also be payable. Standard add-ons, floater cover can be taken as an add-ons. Declaration policy means this can be taken as a floater or declaration also. Okay. Some important points we'll discuss here. This policy is applicable for office, hotels, shops, industrial, means all the manufacturing unit. Which section are there?
Section
3.
And 4, 3, 4,
Section 3, 4, 5,
and 6.
So remember this. Maybe they can ask you likewise also. See, SFSP policy is sorry, Bharat Laghu Udham policy is applicable for which of the following section. So just you can know. Although in section 3 there is dwellings also there, na, simple risk. But other than dwellings, office, hotels also comes under section 3. So section 3 is also. So don't get confused that section 3 is covered or not. Effect of death of insured on this policy. If policy has been issued, then it will be continued. We have seen that till the expiry of the policy to the legal representative. Bharat Suraksha policy. Now we are looking this. Now while studying this policy, we'll compare it with the Lagu also and SFSP also. Okay. Now difference in the sum assured up to 5 crore, it will be a Sukshma Udyam policy.
Okay.
Now what is the subject matter? Building, plant and machinery, stock, all these things, and the settlement will be as per Lagu Udyam only. Whatever is on RIV basis, that is on RIV basis. Stock will be there on whatever landed cost or input cost or manufacturing cost. Likewise, the settlement will be there. So this is a similar to the Lagu Udyam policy, no difference. Okay, premium rate will be equestify terrorism for this two products. Floater cover for stock, loss of stock located at more than one. So these all are similar there. Equestify terrorism cover cannot be deleted here. Okay, and a short period policy will be given on short period scale, which we avoid generally. Cancellation and refund. Okay. Now suppose we have issued a say Sukshma Udyam policy for sum assured of 4 crore for any particular risk. Now due to maybe we found after 2 months that this area is a flood prone. So insurer wants to cancel the policy. Now what will he do? What he can do? He can cancel the policy on short period basis by 15 days notice. He can cancel the policy on pro rata basis by 15 days notice. He can cancel the policy immediately on short period basis. He can cancel the policy immediately on pro rata basis. He cannot cancel the policy. What is the answer?
15 days notice, short period basis.
Okay. Insurer we are okay.
Pro rata basis.
Okay. Now see, cancellation by insurer. As per IRDA guidelines, cancellation is not allowed during the policy period except on grounds of misrepresentation. It is not a misrepresentation, means it is later on it is found that now this area is going this one. So if misrepresentation is not there due to any other reason, insurer has no option to cancel the same. Only he can cancel on which ground? Misrepresentation, that is non-disclosure of material facts, or fraud or non-cooperation. On this ground, if he is cancelling, then how much premium will be refunded on pro rata basis or short period basis?
No refund.
There will be again no refund. So remember this also. Okay. And but if insured is cancelling, then pro rata plus 10% to be written. Now some company-wide changes can later on may be incorporated, but you just remember that pro rata plus 10% is to be written in the event of cancellation. We had short period scale at SFSP. Here we are having pro rata plus 10%. Okay. Now minimum premium shall be rupees 100 plus GST while refunding anything. Okay. Now addition, alteration, extension up to 15%, excluding stock. It is similar to Lagu. Okay. Stocks at main location on floater basis subject to specified location and insurance policy schedule. This is similar. Temporary removal of stock 10%. Is there any change? It is same to the Lagu. Okay. Cover for specific contents, cover for money, documents such as deeds and manuscript. So that will be again same. Yeah. Startup expenses is 1 lakh.
5 lakh.
How much is there in Lagu policy? Startup expenses?
5
lakhs.
5 lakhs. So remember this difference. Okay. And in SFSP policy, startup expenses, how much?
10%.
That is optional.
It is an add-on cover there, na? So cover. They can fix accordingly and premium will be charged. So for SFSP nil in basic cover, Lagu 5 lakhs, Sukshma 1 lakh. Okay. Then professional fees and debris 5%, 2%, same as Lagu and Sukshma are same. Change in SFSP. Okay. Then cost compelled by municipal local authority. We have seen Lagu and Sukshma similar. Declaration policy for stock can be given and all terms and conditions as per declaration policy. So that that will be similar in SFSP. Lagu, Sukshma declaration policy will be similar. Only just coverages will be here extra. Otherwise, declaration terms will be same in all these three policies. Now we are going for the Bharat Suraksha policy. It is again from the same date, 1/4/2021, 1st of April. Now this is a product is standardized, but premium rates are not uniform and vary among insurers subject to file and use guidelines, because that option was given. Now tell me, suppose I want to insure my house for 15 years. Okay, so which product, which of the following is true? Option A, Bharat Suraksha policy can be taken. Option B, SFSP policy can be taken. This option C, this cover cannot be given.
This cover
cannot be given.
Cannot be given.
This cover cannot be
This
given.
cover cannot be given.
Only 10
10
years.
years
Why?
is the maximum.
10 years is
10 years is the
10 is the
maximum.
Correct,
maximum.
correct. So remember, they can ask such questions also. So to check whether you are aware that whether this Bharat Suraksha policy can be given maximum for how much? How many
10
years?
years.
10 years.
10 years.
10 years.
Another question is that see, suppose I am taking a Bharat Suraksha policy for 10 years. How much discount will I get?
No discount.
No discount. No.
No discount is there. If I'm taking for 10 years, there will not be any discount.
No
What will be the impact on 10 years policy? What will be the impact?
Escalation of some
Automatic
insured
escalation.
each year.
Automatic escalation, how much?
10%.
10% each year.
10% each year.
10% every year.
Each year.
Maximum up to 100%.
50%.
Correct. So each year 10% escalation will be there. And if I'm not opting a long-term policy, I'm taking for 1 year only. So will there be any escalation?
10% depend upon the days. How many days it will be? That is a 10% of days.
So again, escalation will be there, but 10% subject to 1 divided by 365 basis for the days. So that will be there. So yes.
What is the maximum discount provided on escalation?
Discount is no, it is inbuilt now. So escalation is inbuilt there. So discount will not be there. Means
Yes,
even
yes.
we are not charging premium for the escalation.
So every year 10% recurring will go.
Yeah. 10 years, 10% every year you will go, and even for the annual policy also 10% is there.
No, sir.
So
what is the
there is no
maximum
change.
discount? Every year 10% for if the policy
Discount,
is taken.
no,
for-
discount.
This is not discount. No, this is the
There is no
increase in
discount. There is
sum.
no
No,
discount.
yeah.
There is only escalation. Long-term policies are allowed to 10 years. That
What
is
is the maximum
escalation
percentage
only.
of escalation?
No. So maximum escalation, how much, sir?
It is 100%. I think.
Maximum 100% is there, na?
Okay.
Okay.
100% for 10 years policy.
Yeah.
10 years. Yes, sir.
So
Because
suppose
10% every year, so 100% will be there, na? Otherwise, if they will give only 50% escalation, we will take policy for 5 years only. Why will take for 10 years? Because we are paying, rate is not reduced. That's why 10 years is maximum. So 100% escalation limit is given. Okay.
So suppose 1 crore is the sum insured in the funds first year. So second year it will be 1,10,000. 1 crore 10 lakhs, right?
Okay.
10% increase. Then after that 10% escalation will be calculated on 1 crore 10 lakhs or 1 crore.
1 crore.
No, that
1 crore.
it will be on basis, because we are taking that at once, na. Maybe so we'll take suppose for 10 years policy is there. So we'll not calculate 10% plus 10% plus 10%. Will know means recurring. It will not be recurring. Flat 100% will be added, and 200% will be the sum assured. On that.
So it will be 1 crore 20 lakhs after in the second year.
Suppose 100 crore is there, then 200 crore will be there. Suppose likewise. Okay. What was your sum assured? That sum assured simple, it will be doubled after 10 years. Yes.
No, sir. If the sum insured is 1 crore, policy is taken for 3 years. So after 3 years, what is the sum insured? If you consider 10%,
30% will be added.
1 crore 30 lakh.
30% will be added.
Okay, directly
130.
30% are it.
Yes. But that 30% will be added at the end of that 3 years. So at the beginning, it will be 120%. Then again, there will be a 10%. Likewise, it will happen. Okay.
So so that means 10% sum insured increase on basic sum insured, right? 1 crore every year.
Correct.
Okay.
Okay. So now here some features of the Bharat Suraksha policy. Okay, so it is basically for the dwellings, buildings, and contents only owned by individuals and societies, not for the commercial. AFT provisions are not applicable for this product. This policy shall be issued mandatory for dwelling. So even whatever the sum assured will be, because sum assured limit is not there here again. Terrorism is also part of the. Now we will discuss compare it with other three products actually. SFSP, Sukshma and Lagu. Sukshma, Lagu, Bharat. Terrorism is inbuilt cover, but in this one, but SFSP, it is add-on. Long-term policies are allowed up to 10 years. Earlier, there were two options of the discount and this one, but the discount option is removed now. Now only means increase in sum assured option is given. Okay. Then automatic escalation of sum assured by 10%. We have discussed this 1 divided by 365 formula. Automatic reinstatement of sum assured after a loss at pro rata. Additional premium adjustment in claim payment is allowed. So that is automatic reinstatement is a same in all the four. Built-in cover for dwellings, general contents for general contents. So suppose I have opted this. I have taken Bharat Suraksha policy for building and contents. Okay. For the sum assured of I have opted this Bharat Suraksha policy for building and content for sum assured say 20 crores. Okay. I have not specifically mentioned the sum assured of the content. How much content will be covered under this policy?
10 lakh. 10 lakh.
40 lakh.
20% subject to
Because
maximum.
20% or the 10 lakh,
Maximum
whichever
of
is the
10
maximum.
lakhs.
Okay. Suppose it is a 50 crore of sum assured, then
10 lakh.
10 lakhs.
Again 10 lakhs.
10 lakh.
Because see 20% is inbuilt cover, general content, but maximum up to 10 lakhs only. So with 50 crore also there, then it is in 50 crore it is coming 1 crore, but 1 crore contents will not be covered. Maximum up to 10 lakhs will be covered. But if I want more contents to be insured, then I have to specifically mention it and pay additional premium for that. Beyond built-in cover, additional sum assured can be taken for contents at additional premium, and basis of valuation for sum assured is a reinstatement value. So for content also. So this Bharat Suraksha policy is deals means the claims are settled at reinstatement value only, not for even contents also. In Lagu and Sukshma, we have seen that for stock and all these things, we are taking market value. But here, for contents also, we are settling claim at RIV basis. Now the peril we will discuss compare with other three. Fire in all similar. Explosion, implosion, lightning. Here in fire, it is not given whether spontaneous combustion or not, or why it is so. But it is not a stock. That's why.
It's not
Then explosion, implosion, lightning. Earthquake, volcanic eruption. This is a similar. We can find it in Lagu and Sukshma. STFI similar. Subsidized landslide, bushfire, same. Forest fire, jungle fire is added here also. Impact damage, similar. Then missile testing operation, RSMD, acts of terrorism, bursting or overflowing of tank, leakage, and theft within 7 days. So all these covers perils are similar to Lagu and Sukshma. Okay. excluding any article or thing outside insured dwelling premises, any article or thing attached from outside of the outer wall or roof of insured dwelling, unless securely mounted. If it is securely mounted outside the wall, then it will be covered. If it is not securely mounted, then it will be excluded. So that item will not be covered under this Bharat Suraksha policy. Now, automatic escalation of 10%, we discussed. Reinstatement of sum assured, that is similar in all four policies. Built-in cover for dwellings general contents for 20%, that we have discussed. Okay, so that is already there. Yes, any doubt?
Sir, for sum insured, there is it's mentioned as no maximum sum insured, no sir. And again here in coverages, it's mentioned as for buildings 10 lakhs maximum.
That is for inbuilt content. Means if you are not declaring sum assured for the content, then you will get 10 lakhs as a maximum inbuilt cover under your building coverage only. But if you want 1 crore of content, you want to insure your contents for maybe 1 crore, 5 crore, 10 crore, you can insure. There is no limit. It is an inbuilt. They have given means free of cost. You do not need to pay any extra premium. Understood this one?
Yes, sir.
Okay. So wait. Yes.
What is the sum insured we can take?
Please repeat.
We take personal accident policy. Personal accident is covered in Sukshma. So, how much is it?
Not in Sukshma. It is in Bharat Suraksha. Only personal PA cover is in under only Bharat Suraksha, not Sukshma and Laghu.
Okay,
that were belongings that we were discussing in the Laguna. That was a belongings. That particular that was given. That PA is given under Bharat Suraksha policy only. We will have the question on this also.
It was given
yes.
To 20%. Up to 20% visit the place they can be covered.
Up to hello.
20 if 20%.
Your voice is not clear. Some disturbance is there.
Up to 20% the personal accident can be covered.
That is see. Just I will show you that slide again.
Second last.
Thank you.
Yes, sir. Slide.
That is in the Sukshma and Laghu Udyog, that 20% for 15,000.
Personal effects of employees. This one. You are talking about this personal effects of employees, directors, and visitor. That is a personal effects, not a personal accident. Don't get confused between these two. So per person 15,000 for a personal effect, not a personal accident. Understood?
Okay, sir.
Read last two lines. Okay. Yes. So for 20% for personal belongings, personal effects, if any loss is there for that. PA is only given under this Bharat Suraksha. But that is also they need to pay premium. Okay, this week.
So can you please explain about the short period retention and the pro rata refund difference? Please clearly explain, sir.
Okay. See, short period. There are particular rate you will find for fire also. Maybe say for 1 month 20%, 2 months 30%. You just see that chart. Actually, I have not taken that one. You can find it in book. For 1 month 20%, 2 months 30%. Suppose just for the example we are taking for the 2 months 30% rate is given. So suppose sum assured maybe premium is say 12 lakh rupees. Okay. Suppose 12 lakh rupees is the premium, and after 2 months suppose insured request for cancellation of the policy, so we'll charge 30%. For example, I'm taking 30%. 30% of the premium and refund the remaining. So how much will be 30% on this 12 lakhs?
4 lakh.
12 3 are
3.6.
36. So 360.
3.6 lakhs.
3.6 lakhs. So we'll keep 3.6 lakhs premium and remaining 8.4.
Yes.
8.4 will be refunded. Okay, this is on short period basis because we have kept on short period basis. Suppose if we are cancelling, okay, so that time we will apply pro rata basis. What is the pro rata basis? We'll take the period. Period is how much? 2 months.
2 months.
So 2 divided by 12, that is 1/6. So 2 lakh will be returned and remaining 10 lakhs will be refunded. So in pro rata, client will get more refund. Understood the difference?
Pro rata? Last point.
Client will definitely get more refund.
Yes, sir.
On pro rata basis, because we that is based on the period. Okay.
So
how much period is passed?
example, please repeat, sir.
Pro rata, I told you na, in the same example, suppose after 2 months, if we are saying that we that insurance is there, or we are cancelling the insurance by giving 15 days notice after 2 months. Now how much period is covered under this policy? Only 2 months. Yes, we have collected premium for 12 months as 12 lakhs. So for 2 months we'll collect only 2 lakhs and remaining 10 lakhs will be refunded. The formula will be period cover divided by total period multiplied by total premium. So period cover 2 divided by 12 into 12. So it will be 2 lakhs. Understood? So we'll keep 2 lakhs, refund will be 10 lakhs.
Yes, sir.
So in the exam, how will be the questions formed? A retention also they will ask, or only the refund type as a short period and the pro rata? That's all they will ask, or a retention?
Maybe see, they will check your concept whether you are aware or not. They can give you that maybe suppose they can give you such example, just I have given, and they can ask you that insurer cancelled. So in that case you have to calculate on pro rata basis. They can say that insured cancelled. So then you have to check that scale, how much is there for 1 month, how much is there for 2 months, and accordingly that percentage you have to apply. That much you have to retain, and remaining you have to refund back.
So notice period is 15 days or 30 days?
What? 15 days for us. For policyholder, he can cancel immediately. For the policyholder, there is no required. He can immediately cancel because then we will charge short period basis. Na? Anyway, we are charging a higher rate.
Okay, sir.
So one question, sir. So now the insurer is going to cancel the policy. So retention is pro rata. What is going to be refunded? Short period, sir?
No. If insurer is cancelling, then pro rata always.
Okay. Then refund is on pro rata.
Pro rata basis. If insurer is cancelling, then the refund will be on pro rata basis. Okay.
Okay, sir.
So floater is indeed cover in Sukshma policy, right?
Which one?
Floater.
Yeah, no, means even they can take a floater also, but again there will be floater extra will be charged. That is not an inbuilt cover. Means they can opt for floater cover. Floater declaration, likewise in SFSP we are taking. They can take this cover, but they have to pay floater extra if they are opting for floater policy. Okay. Is this clear?
Yes, sir.
Okay. Exclusions are given under Bharat Suraksha, deliberate or willful misconduct of insured. Then that is not covered. War risk, nuclear risk, pollution or contamination. Again, here it's the same thing is there. Unless resulting from insured event, occurrence or pollution leading to insured. That we discussed in SFSP. That when it will be covered. Electrical risk exclusion is limited to originating electrical machine, but not to resultant spirit. That also we have seen that dynamo clause is applicable over here also. Loss or damage to bullion, unset, all these things, if not specifically covered. Loss of insured property, missing, misled or disappearance not linked to any single identifiable event, then also this will be excluded. different uninsured insured property moved to different uninsured location. Obviously, it will not be covered. Then loss of earnings, loss of market, any reduction in market value, any addition, extension, all these will be exclusions. Okay, so you just go through. It's rather simple. If you go through, you can this one. This is just a summary I have given. Bharat Suraksha main features I have taken here. Cover home, building and home contents, UQ, terrorism, RSMD, STFI are inbuilt cover and cannot be deleted. Debrisable 2%, architect 5%. Valuable contents like jewelry, silverware, paintings, those that should be valued. Personal accident cover 5 lakhs for insured and spouse is given. Yes, additional premium needs to be given. Now in this case, suppose in Bharat Suraksha policy, I have suppose Mr. A has opted PA cover and he died in a road accident. How much will be payable to him? 5 lakhs.
No payable.
Nothing is payable.
Nothing will be
payable. Why nothing is payable?
Accident due to fire only is covered.
Yes. So not only fire, but all the insured peril. Any of the insured peril, then only that PA cover will be payable. Okay. So if
limit for valuable contents, sir.
Yes.
Limit for valuable contents.
Valuable contents with jewelry, silverware, paintings, these all valuable contents can be covered by specifying the amount as a valued basis.
There is no limit.
That is optional cover, na? That is optional cover. That is not inbuilt. Means I have taken suppose I have taken a Bharat Suraksha. It doesn't mean that my jewelry is also covered. If I want to cover my jewelry, I have to take an additional cover. Yes.
Sir, one question is there. Like
yes.
The
so
personal
the PA policy
cover,
something
5
is like voice was cracking. I didn't hear that question.
Please go one by one.
Sir, 5 lakh for insured and spouse. The 5 lakh each for insured and his
5 lakhs each. 5 lakhs each. 5 lakh for insured and 5 lakh for spouse. If he is opting for both, he have to pay premium for 2%.
Sir, if any accident that both are expiring, both are in the thing, then the legal hire will get the 10 lakh rupees.
Yes. Because this is for both, na? Because he has paid premium for both, so you will get benefit for both months. Both.
So you asked some PA policy question, PA that accident question. I didn't hear properly because voice was breaking. Can you please repeat?
Okay. Maybe suppose Mr. A has taken this optional cover of PA under Bharat Suraksha policy, and he died under a road accident. How much is payable to him? I mean, to his legal year.
It should be by fire only, no, sir?
Not only by fire, any of the insured peril. Whatever we have seen, fire, lightnings, whatever insured perils are there. So in that, but accidentally, if any of the insured peril occurs in that, if that insured dies, then this one claim is payable.
Okay, sir. Okay. Thank you, sir.
So one doubt, sir. For
Yeah,
escalation, you have said every year 10% will be increased. What if there is a break in insurance, sir? How many days it is allowed?
No. If there is a break in insurance, then we are the fresh policy will be because that is not there is no any such provision. Then that is our call. If you want to increase this anyway, if there is a escalation, if there is a break in insurance, then escalation will be done. And even if there is a break, okay, escalation is done. So sum assured is increased. So when at the time of renewal, that sum assured will be considered. So premium will be charged on that only. So there is no impact. I think so of the break. Only that for the particular period that cover will not be there.
Okay, thank you.
Sir, is valuation certificate required for this thing? Valuation valued policy.
Above 1 lakh is required.
Yeah.
What are the limits?
Above 1 lakh.
Already told. See, have you listened?
Individual item above 1 lakh, total item 5 lakhs above.
That is the minimum limit. If below that is not required.
Above that, valuation certificate is
1 lakh for individual and 5 lakhs for the total. Okay.
Sir, one doubt.
Yeah. Let me finish it. Let me finish this and then ask your doubts. Just going through. I'm having some questions also, and after that you can ask your doubts. Okay, I will give you everyone a chance. Okay, so Bharat Suraksha, we have seen there is no under insurance is applicable. Remember, this is also one of the important aspect. Under insurance is not there. So suppose it is see, I have insured my house, say, for 2 crores rupees, and there is a claim of maybe a 5 lakhs. But while settling the claim, the surveyor found that value of my house is 5 crore. How much is the payable if claim is of 5 lakhs?
5
5 lakh.
5 lakhs totally is payable, because under insurance concept is not there in Bharat Graha Raksha policy. Okay, remember this one. Then no excess applicable except terrorism. In terrorism there is an excess, that normal excess, this one. Otherwise in Bharat Graha Raksha policy, excess will also be not there. So I will get that 5 lakhs fully. Not even a under means prorata means under insurance deduction, not a excess deduction also. No limit of sum insured if occupied as a dwelling, sum insured for building on reinstatement value basis, and contents will also be on replacement. Theft cover inbuilt within 7 days from operation of insured peril, which we are seen, and escalation 10%. Sukshma Udyam, just this is some points which I have highlighted separately, which we are already covered. Now we are comparing. Already we have compared while discussing all the products, but we are specifically comparing all. SFSP had option of market value or reinstatement value for the this one. Maybe you are building P&M, FFFF, but here there is no option, because which is the settlement basis in SFSP? Sorry, Lagu, this Sukshma and this one. It will be reinstatement basis, RIV basis. Reinstatement of the sum insured after loss is termed as restoration of sum insured in new product. That is a simple as a definition given. Earthquake is add-on under SFSP, which is inbuilt cover under new policies. Remember this difference. Architect and survey fees and removal debris 3152, which we discussed already in new products. Forest fire and fire add-on cover under SFSP policy, but here it is a inbuilt cover. We discussed this also. Theft within 7 days is not covered under SFSP, which is covered under all 3 new product. Loss of rent and rent for alternate accommodation is add-on under SFSP, but which is covered under Graha Raksha policy for the sum assured chosen. Okay. Escalation is an add-on cover under SFSP. Automatic increase in sum assured is there in Graha Suraksha policy, long-term as well as annual policy. And under insurance strictly applicable under SFSP, which is not applicable for Graha Suraksha policy. And see, so here there is a difference. There are 3 sets now for under insurance. SFSP, how much under means there is full under insurance will be there applicable. For Graha Suraksha policy, no under insurance. For Lagu and Sukshma, up to 15% it is there, but more than 15%, then under insurance will be applicable. So complete difference between 3 things, 3 products. Comparison here, aircraft damage is separate peril. I already told you, but it is added in under which peril? Aircraft damage is added in which peril?
Impact damage.
Impact damage. Okay. Then fire peril under SFSP excluded own permanentation, natural thing, which is added now under Lagu and Sukshma. Terrorism was covered with extra premium, which is covered as insured events under new policies. So it is inbuilt covered again. Cancellation clause in SFSP allows cancellation by both insured and insurer, but in new policies it is allowed to whom only? Who can cancel the policy in new product?
Insured.
Only insured. Insurer is having option only in the case of misrepresentation or fraud. Okay, so that is the only reason by which insurer can cancel, and in such case there will be no refund. Okay, now question, even answers are given here. In the new fire policies, which statement is correct about aircraft damage? See, you can see actually already I have given answer here, so you just you can just go through. Remember, see, aircraft damage is clubbed with the impact damage. Gross Savida policy, there will be a under insurance complete waiver. So questions are there. You can find it. I will share this PPT with you, so you can see it there. So that's why I'm not covering it. Instead of that, I can take your doubts over here. So if you have any doubts, you can ask me.
So
Even I'm sharing my number also here. Yes.
So you told now the 5 Sukshma policy 5 crore is the maximum sum insured. The endorsement, if we increased in between the policy period 1 crore, so it can be done.
Yes, it can be done.
Okay. And but next year we have to give SF.
Next year we have to select the product according to sum assured only.
Okay, sir. Okay, thank you, sir.
Whether it is decrease or increase, whatever it is. Okay.
Okay, sir.
Any other doubt?
Sir, to new policy impact due to animal is not covered. So if it is
your voice is not clear, madam. Please be loud. Some disturbance is there.
Now, new policy now, impact damage due to animal is not covered for
Impact damage due to animal. Your voice is not clear actually.
Animal
vehicle is given there.
So way to get this PPT, sir? In the YouTube you will go to post.
You all are on Telegram group, na?
Yes, sir. 13.2.
Yeah. So on that 13.2 2022,
yes,
that
sir.
Telegram group is there. I think so. So on that I will share it. Okay.
Okay, sir.
So I hope all the doubts are clear. If you have any other doubt, even my number is shared. You can ask me on WhatsApp or Telegram. That number is given here. So even in the group also you can ask. We'll clear that.
Thank you so much, sir.
So, thank you very much. Thanks everyone.
Thank you,
sir. Thank you, sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Hello. Hello, sir.